All right, so you guys are most welcome to Clint J. Why can't I join the meeting? Why? You can join now. You can join. You can join up here now. It's right there for you to join. All right, so let's begin. Okay, I'm just going to go straight to the point. Now, guys, if you are a what do you call it now? If you are, let's say, a GJ trader, UJ trader, EU trader, I'm basically talking about the major Forex pairs and then minor Forex pairs. If you trade all those Forex pairs, right? Let me just go to GBP USD. Anything with the USD, if you trade those pairs or you trade the JPY pairs, just know that this call is for you, right? I want to simplify everything. I'm going to simplify everything. Now, let's just let's just do an analysis. Even if it's not an analysis, let's just try and bring something up first before we start to analyze. So usually, right, the JPY pairs, that is pairs that are quoted with JPY. I'm going to help you guys understand something. We have a base pair and a quote pair, first and foremost. We have something known as what? A base pair, right? And then there's what? The quote pair. So when we say base, we're saying the pair, the main pair, right? That, that has the value. The quote is what we are now interpreting that pair with. The base is the main pair we're looking at. The quote is what we're using now to read the value of that base pair. What we're using to read the value of that main pair. So, for instance, now, if you have NGN USD, who can give me an idea? NGN USD. And then the second one is what? USD NGN. Who can tell me? Who has an idea? USD NGN. Now, who can tell me what will be the value here? Which one is the main? Which one is the what? Which one is the quote here? And then which one is the main? Which one is the quote here? I know you guys are on the call, so let me come to you.
The main is okay.
But for this first one, so for number one, yes, go ahead, please. I'm listening. For number one,
the main one will be the NGN.
The main one will be the NGN, right? Okay. How about for the number two?
The main one will be the USD.
Will be the USD, right? Thank you so much. That's Abraham. Thank you very much. So the thing is, right? If we're looking at the value of this guy now, well, who knows what the value of this one will be? If we're looking at the main as NGN, what will now be the value in USD? Who can help us? Now I won't catch you now. Who can help us? What would be the value of Naira in USD? Naira as the base and USD as the quote. What will be the value? Who can help us? Somebody should try. Somebody should quickly try. There's no time. My guys are here now. All right, so let me just type it out. The value should be something like this. 6 like this. Let's verify. Let's verify.
Yeah, that is it.
That is it, yes, sir.
Yeah, I verified.
Okay, but it's 3 zeros now, not 4 zeros. So we have to go back. 3 zeros. Exactly. So this is the value of the Naira in USD, quoted in the USD. That is the US dollar. And now, how about this one? We're talking about the value of the USD. One unit of USD in Naira. Who can tell us what it is?
It will be 1.5.
Fantastic. So you can see now, that is how we look at base pairs and quote pairs. So anytime we have a base, that's the main pair, but we're looking at its value using another pair to quote the value. So when you say BTC USD, we're saying this is the value of BTC in USD value. That is in USD quote. This is the value of BTC in USD. BTC USD. This is the value of BTC in USD. And what's the current price of BTC? Let's check. As see the hot like this. This one is $115,000. $115,000. Let's just leave it like that. $115,000. Okay. So everybody understands this now, right? The base pair and the what? The quote pair. Everybody gets it? Now let's move forward. So if we're doing risk management, let's just say we have an analysis, right? Let's just say we have an analysis. I want to believe that all the people trading on MT5 can already analyze markets. So let's just say we're looking for an opportunity and we decide, okay, we want to find a very sharp opportunity. Okay. Usually I wouldn't trade on the 4 hours. Okay. I would not encourage any of you to trade on 4 hours, except you want to be a swing trader. Me, I'm a day trader. I would want to catch my trades and hold them maybe intraday self, maybe for a day or two. Let it not surpass 2 days or 3 days. If not, I will get frustrated and I would even just leave the trade. Because I'm wired as a day trader, you have to know your personality type. So let's just say we have this pair now. And let's just say this is an analysis, even though I don't expect any of you to take this anyways. This is not financial advice, it's just financial literacy. So let's just say this is the last strong liquidity. Yeah? Or we can even use this lows here as liquidity. And we're saying that, okay, we want this market to come in here, take the liquidity, take the gap as well. Okay? If you check very well, there's a nice gap there. So we can also mark it, but not everybody marks the gaps. As long as you can see with your eyes that there is actually a gap there, it's fine. Okay? That's all you need to know. As long as you see that there's actually a gap there, it is fine. You don't need to do too much. Okay? Unless you want your charts to be so fine, you want to send it to somebody and you want to impress the person. It's not about the fancy charts, it's about the money. So let's just say we have this now on GBP JPY. Now, how do we calculate this? So I'll reduce this. Now, this is a 4-hour time frame. How do we calculate this? Now, this is very, very simple. On the JPY pairs, right, I'll teach you something very, very crucial that you guys all need to understand. If you're trading anything that has JPY behind, maybe USD JPY, GBP JPY, Euro JPY, there's something called a unit of measurement, right? There's something called a unit of what? Measurement. And that unit of measurement for JPY pairs is 6.62. I hope you guys are getting it. The unit of measurement for JPY pairs is 6.62. So if I want to derive my risk amount, for instance, now I want to analyze and I want to get my proper risk amount in order to get this trade. Now I'm leaving my, maybe I'll keep my stop at this particular point. That's if I'm trading on the 4 hours, and I'll keep my take profit at the high there. Okay. So the risk to reward is 5.08. Now, what happens if I want to calculate risk management on this? Very quickly, guys, we don't have time. We don't have much time. Very quickly, it will now be what? Risk amount divided by the unit of measurement. So we all know we have a risk amount, a particular risk amount. Everybody has a risk amount on their capital. Divided by what? The unit of what? Measurement. It doesn't stop there. Now, guys, look at this. I know that they tell you that if you want to derive, what they call it, you want to derive your pips, you use this to minus this. You minus this from this, and you get the pips. And you know JPY pairs, the decimal point is 3. It's after the 3 digits. After the first 3 digits, that is 196.96. That is where you now find your what? Your pips. Your pips is after the digits. So it's 0.01. Don't worry. Later on, you guys understand. But for now, I'm not here to teach you all about Forex. I'm just here to tell you something. So for JPY pairs, you have something like this. There's always a point, and then you have something like this. So we begin to calculate our pips from this level. Somewhere here. That's where we begin to get our pips from. But for normal Euro, maybe Euro USD pairs and stuff like that, it's usually something like this. Then we get our pips using, from here. It starts from here. This becomes 1 pip. So normally, a pip is, for Euro pairs, 0.001. This is a pip value for normal Forex pairs. But for all those JPY pairs, usually have what? it's 0.000 point something. It is after the decimal point that you can now begin to count your pips. Are you getting it? So let's go back to this. So if we're going to calculate this, it will now be 196,963. Let me leave the calculator very small so we understand how we do the normal pips calculation. 196.963 minus, you see it now, 196 point what? 269, and then we'll get what? You see, 69 pips. You can see where the pips are. Starting, if it's 0.01, it's from here. So it's 69 pips. Okay? But if you don't want that now, just come here to your stop loss area, guys. What do you see here? Who can see this? Who can see this, please? Who can see this? Who can see this, please? I need fast response.
That's 69.
69.4.
Fantastic. And did we not just get 69.4 pips? Did we not just get 69 ahead? So it means that this is what you're looking at for your pips. This is your pips. So it will now be risk amount, right, divided by unit of measurement, which is 6.62, and then what? Your pip. So we'll say stop loss in what? In pips. And our stop loss in pips, as you can see, is 69.4. So now let's use this. Let's use real money and stuff. So let's just say we're risking $100 in our trade. Maybe we have a $1,000 account. We're risking $100, right? It will now be $100 divided by 6.62 divided by what? 69.4. All right, let's do the math. Let's quickly do the math. Where's the calculator? Let's quickly do the math. So 100, right, divided by 6.62 divided by 69.4. It means that you're going to use 0. This is so use 0.22 lots. You can see it's 0.217. So you're going to what? Cross over. You take this over to this point. It will now be 0.22. So our lot size will now be what? Lot size will now be what? 0.22. That will be our lot size. So if you're opening a position on this trade, if you open a position on 0.22, it will be worth $100. It means that if you lose on that trade and the trade gets to this point, you're only going to lose $100. Are you guys getting it? Please, I need you can be dropping responses on the on the what do you call it? Can you guys hear me very well?
Yes, you can hear.
Fantastic.
Hear you.
Fantastic. Okay, that's good. Now, is everybody getting it, please? Are you guys getting me? So this becomes our lot size. If you're speaking, you can speak before I continue. But if I'm speaking, you can't speak because it will be resounding.
Okay, sorry. Where did you get this 6.62 from?
6.2 is a normal unit of measurement for JPY pairs. So unit of measurement, let me put it here. Unit of measurement for JPY pairs. That is any pair that is quoted with JPY. Sure, you understand now. USD JPY, CAD JPY, GBP JPY, all those pairs that are quoted with JPY, their unit of measurement is usually 6.62. 6.62. Are we all clear there? Are we all clear now? I think we're all clear now.
Yeah. What about other pairs? Their unit of measurement are...
Yes. No. Let's just we'll take it one step after the other. So with this now, right? Can you see, right, that we're risking $100, right? And our lot size will be 0.22. If we want to gain clarity that this thing is right, what do we do? If we want to gain clarity that this thing is right, how do we get it? We now need to do a simple mathematics just for clarity now, right? We'll now say this lot size 0.22 divided or multiplied rather by the 6.62 and then multiplied by these pips. You can see if we hit our TP, right, it will be $100 times 352.4. That is our what? Our target in pips. That's our take profit in pips. Okay, so if we're going to do the math, let's quickly do this. 0.22, right, multiplied by what? 6.62, right, then multiplied by what? 352.4. Oh, I've not put the 2 yet. 352 what? 0.4 equals, can you see this? $513. And look at our risk to reward. Can you see our risk to reward? I hope you guys can see our risk to reward. It's 1:5, right? So remember, you're risking $100. What will you stand to make? $500. So that gives you clarity. Are you getting me now? If we had gone with the initial 0.21, which is not bad, if you don't want to approximate, if you want to use like the normal value, who remembers that there was a normal value before we now approximated? If we want to use the 0.21, it will now be 0.21 multiplied by 6.62, then multiplied by what? The target in profit. The target is what? 352.4. 352.4. It will now be what? 400. You see? So it was good that we approximated it. It was good that we did what? Approximated it, so that we get the proper risk to reward and we know that, okay, our calculation was right. So if I'm risking $100 and I carry out this calculation, if I'm risking $100, the lot size I should open on that account for that position, right, is 0.2. That is the exact one that will give us what? Our $500 in profit. And then if we lose $100. Any question before I move on, please? Any question before I move on? Is there any question before I move on, please?
No question yet.
All right. So now let's move to USD pairs. We're saying pairs that are quoted with the USD. So let me just copy these guys. Copy. Okay. Let me just move down. USD pairs. Fantastic. So let's just take this now. Let's delete this first. So for USD pairs, right, the unit of measurement is what? For USD pairs is what? 10. It's not 6.62, it is 10. Okay? The same formula applies here. Okay? And that formula has to be gotten from what? Your position 2. Your position 2. All right? So imagine, I don't even see a nice setup here, but if I'm to trade this, I'll trade this on maybe a lower time frame. Or let's just say 1 hour time frame. Let's check 1 hour time frame. 1 hour, good. So 1 hour. Let's just say we have something like this. This is not bad, but I wouldn't want to trade from that level. This has already gotten a reaction, right? That's given a very sharp reaction. So no problem. Let's just say we had this kind of setup, right? And then let's just say we took this point as our what? Our order block, okay? Right? And then let's just say we already drew our, let's say our take profit was from a higher time frame high. Okay, maybe this level. No wahala. Don't trade like this. So let's take this significant high there so that we have a better target. Okay. Then our stop loss now. Where should we place our stop loss? Let's just say we put our stop loss somewhere just below that low there, or just a little bit on top of that order block, so that if market comes all the way down there, we will still be in the trade, right? Because it's likely to bounce off that OB there. No wahala. So imagine we have this kind of setup now. Everybody, just pay close attention. The formula does not change. The only thing that has changed now is that the units of measurement has what? Changed. For USD pairs, for pairs that are quoted in USD, which is this GBP USD now, we now need to use what? 10 as our unit of measure. So our risk amount still remains what? $100. But now our unit of measure will now be what? 10. And then we now need to find our stop. What's our stop here? Can you see the stop is just after this percentage difference for crypto traders? This thing here is our stop. This is our stop loss in pips. So we have 31.2 pips. If you want to get it manually, you you minus this from the entry, you minus your stop price from your entry price, you will arrive at this figure, right? You minus this from this. In fact, let me show you guys so that you guys don't get lost. So we have 1 point, you know, this is a USD pair. It has what? 4 decimal points, 4 digits after the decimal points. So let's do this. 35066, right? Sorry, I'm going to take only 16 so that we have the exact pip value, because the pip is after this decimal point 1, 2, 3, 4. Okay, so 1.3506 minus 1.3475. Okay, and then you see 31. And then over here, we now have what? 31.2 exactly. So over here, we now have what? 31.2 as our what? Our stop in pips. Okay. Our target is this 176 pips, 176.4 pips. So let me even just write it out, because a lot of you might still be lost. So I'll say our take profit, right? TP, let me just put it, TP in pips. We'll now put this one here. You see, 176.4. And then SL in pips. In pips is what? 31.2. So remember the formula. The formula helps us to understand it better. So it will now be $100. If we're risking $100, you know, the $100 has to be like 10% of a $1,000 account or something like that, okay? If not, you can't have $100 and be risking the entire $100, okay? It has to be part of what 2% and 10% of your entire portfolio. So we're risking $100. We'll now say $100, right? $100 divided by 10 now, and then divided again by 31.2. Will arrive at our lot size. So on this account, we open a lot size of what? 0.3. See it? 0.32 to be exact. So let me just remove this. 0.32. 0.32. So it means that anytime you enter 0.32, you'll be risking $100. If the trade goes against you, you lose only $100 on that Forex pair. Okay? But if you win, you just multiply $100 times 5.65. 100 multiplied by 5.65, you make what? $565. So how do we know that this thing equals around? It should show us that we actually calculated the same thing, right? Because we have a 1:5 trade, 1:5.65 trade. So let's discover, how do you gain clarity? What do you do now? If you want to gain clarity, you will now say my lot size, which is what? We'll do everything. Our lot size multiplied by what? The unit of measurement. I'll use unit of M, and then multiplied by what again? By the pips in the target pips, which is 176.4 here. So now say target in pips. All right. So let's do the math. So everybody, check it on your own end. Let's not be like I'm trying to scam you guys. So the lot size was what? 0.32 multiplied by what? 10, right? Then multiplied by 176.4. Okay. Who can give us the answer? Let's check it. Let's use our calculator to check. Let's use our calculator to check. It has to be around $500 to show us that we're really risking the right amount. We're risking the right lot size. We're using the right lot size times 10 times 176.4. You see? Can you see, guys? So you can see it shows us our what? Our 1:5.6. Are you seeing it, guys? Right? Please, I need feedback now. I need feedback.
Yes. Sorry.
Okay.
Yes,
Okay. Thank you very much. Thank you very much. So this is how you do your calculations on what? On Forex pairs. Now let's go to gold. I know a lot of you here like to trade gold, but you've never understood the proper lot size. That's the reason why you get kicked out of the market a lot. That's the reason why you get kicked out of the market. You're not carrying out your risk rule. You're not risking 1%. Neither are you risking 10%. Sometimes you're even risking 50% of your account because you are not doing proper risk management. So let's go to gold now. I need to show you guys everything so that nobody's confused. Let's go to gold. Sorry, I want to copy every single thing here. All right. Let's move to gold. So here is gold, right? Let me see. Okay, this was gold. Gold had already given a very nice trade on Friday and stuff. Okay, but let's just imagine that you want to trade gold. Let's just do a very like quack analysis for now. It's just for what? For the sake of the calculation we want to do. So let's just imagine I want to buy gold as soon as the market opens or something like that, right? We have this block here. We have liquidity. Absolutely, we have liquidity down here, right? We're expecting market to come and take that liquidity. Is there a gap? There's this massive sweet gap here. Okay, there's this sweet gap here. So let's just imagine that we're seeing this opportunity on gold market. So this is a buy opportunity, of course. So you bring out your buy position tool. You drag it to the recently created highest high, which was this guy here, and then you keep your stop somewhere here, right? That is exactly what to do. So let's refine this properly. Let me just refine this properly. Good. So how do we calculate this guy now? How do we do a calculation on this guy? Right? Now, check gold. Gold doesn't have those peak values. Gold moves in points. Gold moves in what? In points. It doesn't move in pips. It moves in points or ticks. That's why it's very volatile. It's not like the normal Forex pairs. Forex pairs move in pips. Gold, BTC, volatility index, all those ones, they move in ticks and in points. Okay, so you can see on gold, this becomes our what? Our stop loss in pips. But remember, it's in points, and this is also in points. So if you want to get a precise stop loss, right, it has to be something like this. Can you see that stop area? Can everybody see it? Let me drag this out. Sorry. Oops, I'm sorry, guys. So look at that stop area. What do we have here? Look at the first figure, 3.81. So on gold, this is what we'll do. We'll say 3.81 times 10 to get our pips. Who can give us the answer? 3.81 times 10. It means that 38 pips is the answer. 38.1 pips. That's our answer. I hope you guys are getting it now. 38 pips. Is anybody asking any question on the community? Let me check. Fantastic. Abraham already got it. Okay. So 38 pips is the answer. Okay. How about the target in profit? You can see 22 in front here. Over here, we're not using this. We're not using this guy. We're using this guy. But I'll teach you guys how to also use this guy. I'll teach you how to also do what? Use this guy. But let's use these figures first. So 22.82. 22.82 multiplied by 10. 22.82 multiplied by 10. You have what? 228.2 pips. So let's also write that. Multiplied by 10 to give you what? 200 and what was that figure I got? 228.2. Oops. 228.2. So that is what pips, the target pips. Don't forget, never ever forget. So one is the stop, one is the target. For Estelle. All right. So anything we're going to be doing here now is going to be dependent on these things here that we just got. Now, let me show you the second one. Can you guys see this 2282? Just put a decimal point before the last digit. Are you seeing these digits? You see this target? It was 2282. Just go there and put a decimal point. Look at this one again, 381, right? Can everybody see it, please? I need to be sure that you guys are following me. Can everybody see this? What does it show here? You guys answer me now.
381.
Right? Fantastic. You guys are here now. I see my guys. Oh, now plenty for here. All right. So 381. So what do you do? Just put a decimal point. So we have 381. Put a decimal point before the last digit. Can you see that we've arrived at the same answers? Can you see? Are the answers not accurate? Check. Hello.
Yes, it is.
Fantastic. So that's another hack for gold. Okay, you just need to come here and see it. So how do we now calculate our lot size on gold? Okay, don't forget the formula remains the same, right? It is still risk amount divided by what? Unit of measurement. Let me write it out because a lot of you will still be confused later. But by God's grace, you overcome confusion. And then what is the last one? And then the SL in pips. Okay, so let's find out this one now. What's our risk amount? Let's say we're risking the same $100. $100 divided by, remember, unit of measurement for gold is what? 10. And then our stop loss pips. Who can tell us our stop loss pips before I type it to be sure that you guys are gaining understanding? Who can tell us what's our stop loss pips?
38.1.
Thank you very much.
38.1.
Thank you very much. That is what? 10. So you now do 38.1. So now let's quickly calculate. Let's calculate it now. We have what? $100, right? Divided by what? 10. Divided by what? 38.1. It will give us what? 0.26. 0.26. So our lot size will be what? Is equal to what? 0.26. Now that 0.26 will open a position of $100 for you. So each time you enter 0.26, 0.26, 0.26, assuming your account can carry it, you are entering $100 on gold. Okay, this is how to calculate it. Now, how do we confirm? How do we confirm that what we have gotten is the actual amount? How do we confirm? You remember how we confirmed the first one? Who can remind us? Who can remind us? How do we confirm? Who can quickly remind us now? How do we confirm that everything we have gotten is correct? This lot size is actually $100. How do we confirm?
Multiply it.
So for clarity, which one are we multiplying? For clarity's sake, right? You now say what? The lot size, which is 0.26 multiplied by what? 10, which is the unit of measurement, right? And then multiplied by the target in pips. What is our target in pips? Who knows our target in pips? Who can tell us, please?
228.2.
0.2. Fantastic. All right. So let's get the answer. 0.26 multiplied by what? 10 multiplied by what? 228.2. It will give you 593. And let's check. Can you see this? $593 is almost 500. You can see this one is to 5.99. So you can see our what? Our exact lot size is commanding the exact risk to reward ratio. So that shows us that we are correct. Are you guys understanding it? Okay.
Yes.
Okay, fantastic. So now let's go to what? The crypto pairs now. A lot of you like to trade crypto on MT5, but you don't know how to do your proper lot size calculation and all those things. Okay, so let's go to what? Crypto pairs. Let's go to what? Crypto pairs. It's like somebody's entering. I'm hearing see if somebody's using MT5 on the call. I mean, now David.
No,
all right.
not the
Okay. So this is BTC. this is BTC, right? BTC has just given us, I don't know, this move looks weird, right? But let's just say, okay, we want to sell BTC from here because this was the last high BTC gave us, right? And then it gave us this low, and it hasn't broken above this high, okay? So we can now say, okay, internally, based on internal structures now, right? Based on internal structures, we can see something playing out here. So let me just quickly mark it out as if, you know, we're about to take a trade. No wahala. Okay, all this is liquidity. Don't forget, all of this is liquidity. All of that is liquidity. But I'm not advising anybody. I'm not trading. I'm just giving an example. I'm just giving an example as if I want to short it from here, right? And as if this is what liquidity here, right? Let's just assume that, okay, maybe this is liquidity, or maybe we even want to short it from here. This is even the nearest POI, but it's just that this one has a gap. That's why I'm using that one, because that one has a very sweet gap in front of it, okay? So let's just say I want to short BTC from there, and then I'll draw my short position 2. I'll keep it like this. Make sure it aligns properly. And then this will be my target. I can even target this low, right? A lot of you that like to take risks a lot, just target that low, no wahala. So let's say we have this on BTC, right, as a signal now. Assuming the market comes all the way up here, then comes back down to take that low. You know, we'll make like 4 times of whatever we're risking, 4.5 times what we're risking, okay? For BTC now, I want you guys to pay attention. For BTC now, we're not using all those other figures outside. We're using this first figure here and this first one here. Are you guys getting me?
Yes, we are in.
Yes.
Fantastic. So crypto pairs do not have any unit of measurement. So just wipe that out. Wipe it out. It does not have any unit of measurement. So crypto pairs is just very simple, very straightforward. What do? You just say risk amount divided by stop loss in pips. Let me write stop loss now that we have enough space. Let me write it very well, because a lot of you, I don't know, for some of you newbies, man, you be miscalculating stuff. So look at this, stop loss in pips. So imagine that we're risking the same $100 here, and remember that now this is our stop loss in pips. I told you that BTC doesn't move in pips, it moves in points. So what do? We just use that exact point there, 198.5, as our what? As our stop loss in pips. So it will be 198.5. Verify it again. Can you see? 198.5. So exactly what you get. See, so you just say $100, right? Divided by 198.5. And here you go. This will be your position for $100. Who's not getting it? 0.5. Just open 0.5 on that BTC, on that account. Assuming you have a capital of like 1,000 though. I'm telling you, because you'll be risking $100. So your capital, this will be 0.5 lots. 0.5 lots. Do you guys get me? Okay, so for this one, again, look at our target. Our target is 908.2. Our target is what? 908.2. So how do we clarify that this our lot size is correct? For clarity, let's get it right. How do we get it for clarity? We come here and say 0.50. Remember, we don't have any units of measurement anymore. Remember, normally $100 should give us $458 here. True or false? Because that's the risk to reward ratio. So it will now be $100 multiplied by what? The target in pips or points now. 908.2. That's what we'll write there. 908.2. So who can tell us the answer? Who's the fastest? Who's the quickest finger? I want you guys to try it by yourselves. Who can give us the answer? Right? Real quick. Try. Who can give us the answer? Okay, let me do it here. So it will now be what? Let's get it. 0.5 lots, right? Multiplied by
It will be
908.
454.25.
Fantastic. 4.4. So it's giving us around our risk to reward ratio. Thank you, Shavon Wales. Fantastic. So I hope you guys are getting it now. It's giving us approximately what we're going to make. Fantastic. It's giving us approximately what we're going to make on our 1:4 points. Remember the RRR. 4 points. Look at it, 4.58. So it's giving us approximately what we will make. So for clarity's sake, you always need to check. You always need to check. The price, what you're getting, right, has to tally with your risk to reward ratio. Remember, on this risk to reward ratio now, if we were to get it to just be that our risk amounts, right, multiplied by the 4.58, which will give us about $458. But it is trying to give us the realistic value based on this lot size. To give us the realistic value based on this lot size. Is there any question, please? So this is how we do it for Ethereum, for BTC, for all of them, right? So I need you guys to go through this video over and over again so that you can actually carry out proper risk management. A lot of you are trying to pass proper accounts, but this is the only thing stopping you. This is the only thing stopping you because you don't understand how to risk, a particular amount consistently, and it's dealing with you. It's dealing with your ability to keep the accounts, to make the account survive. All right, you need to understand it. So, is there any question before I leave you guys? Is there any question? Please ask.
Yeah. I have one question. Does this
Who's
calculation now regarding this BTC USD?
Mm-hmm.
Can you hear me?
Yes, I can hear you.
I said this calculation now that you just did on BTC USDT now. Can we also do it for other pairs like Pepe, Shiba, Sol, and the rest, AVAX, on like when we want to trade on Bybit and other exchanges?
No.
Like Bingex and the rest.
Okay.
Can we also do this
on exchanges? Do you want us to do the one for exchanges?
Yes.
Okay.
Yes,
Very,
if you
very
can,
simple.
please.
Okay, so I'll quickly do that now. All right,
Thank you.
so let's go ahead. Yes, now that you guys know how to use this, this is for MT5 traders. But now, let's say we want to do this on exchanges, right? What you need to take note of now is this guy, and this guy. What are all these things, my guys? These are what? This is your stop loss price, your entry price, and your take profit price, okay? So let's just type it out somewhere. Let's type it out somewhere, or let's just, let's just do something like this. And then let's keep our exchange like this. So remember, it was BTC we're looking at. So we'll go back to what? BTC. So let's do something like this. Fantastic. I need this to be clear. Good. So first things first, you can go to a site called cryptosphere.trading. Very simple, right? Very, very simple. But before I use Cryptosphere, let me use the manual method. The manual method. So what is the manual method? Can you see this percentage difference here? Who can see this percentage difference here at your stop loss area? 0.17%. Are you guys seeing it, please? Always the one at your what? Your stop loss area. Always the one at what? Your stop loss area. So this percentage difference is 0.17. So all I need to do is say my $100 divided by 0.17 and then times 100. And I've gotten my what? My position size. They call it position size in crypto. In Forex, we call it lot size calculation, lots and pips size calculation, right? Or lot size and pips calculation. But in crypto, we call it position sizing. Position sizing. So if I'm going to risk $100 on my BTC, it will be 58,000 units of BTC. So let me just carry that 58,000. That 58,000, I'll copy it somewhere. Let me copy it like this. So that's the manual method. So this is it, manual. I'll put manual by the side so everybody understands. I don't go spell manual. Then let's use the auto one, the one from Cryptosphere, right? That one is even easier. So this is your $100. You only need to put your entry price. Everybody just go to cryptosphere.com. Let me drop it on the group so you guys will understand it, right? Cryptosphere. And for those who will be watching this video later on, you need to come to my community. You learn all these things. You get all these things for free. Now look at this, guys. Entry price is what? 115. Oh, sorry. 115. Oops. Don't go type nonsense for here. Entry price is what? 115,892.3. And then look at your stop loss price. 116,090.8. 090.8. And then calculate. When you hit calculate, can you see 58,000 again? But let's copy it and paste it alongside the one we had before. So look at this. You can see the manual one. We had 58,823. The one from Cryptosphere, which is the auto from Cryptosphere, or let me just say from Cryptosphere. We have what? 58,384.03. So it doesn't really matter. It just depends on you, right? If you want to use the auto or this manual one, it's fine. It will still give you almost the same risk. So now that's our BTC, right? I'm already on BTC. If you see, let me scroll. You see, this is BTC, okay? And then I now need to enter all this data. I want to do it on a very clear screen, but I don't know. Okay, let's just do it like this. So it's a limit order. Remember, our entry price is what? 115,892.3. That's a limit order, 892.3. It's a pending order. How about the value we just got? So remember, we got the first one manually. So let's take the one we got manually, this one, and let's see if it's going to give us the same risk amount. Remember, we're risking how much? Who can tell us how much we're risking, please? Who can tell us how much we're risking? $100. So 58823. Oops. Okay.
$100 risking.
Yes. 23. Then let me see if I can add those decimal points. 0.529. Let me just say 523 or 53.53. Okay. Now see my TP and my SL. Leave it on advanced if it's on Bybit or any other exchange. Now remember we're shorting, so put it on short, right? Now put your take profit price. Your take profit price is 114,984. 114,984, right? 0.1. Okay, so you can see it's already giving us our risk to reward is what 4.58, which is almost 4.6. It's giving us $160 already, showing us our ROI, our return on investment if we risk $100. Now let's check our stop loss. Our stop loss is what? 116,090.8. So 116,090.8. Now let's check. What are we risking exactly? Look at that, guys. What are we risking? Look at it.
$100.
Exactly. $100 to be exact. So let's even confirm now. Let's confirm it. And then let's use the one we got from Cryptosphere. This is the one we got from Cryptosphere. So let's copy and paste it. Let's see if the risk will change. Paste that one. Okay. Now let's check the risk again. Come down and see. Can you see this? This is exactly $100. 99.9. Are you guys seeing it now? Are you seeing it, guys?
Yes.
Fantastic. So this is how it works, my guys. This is how we calculate what? Position size and order value. Your position size is your order value. So this is how we calculate it on crypto exchanges or for crypto exchanges. But remember, the previous calculations I did were for what? MT5, for brokerage, for brokers. When you're using XNES or Deriv or stuff like that, you must understand how to calculate it like that. So is there any question before we leave tonight? Is there any question, my guys?
Yeah, so the thing is that with this kind of calculation now, can we use any amount of leverage you want to use, like 200x, 250?
Okay, now let me
100x?
help you guys. Okay, that's a very wonderful question. Now let me help you understand.
Initial stop loss.
Okay, now let me help you understand something. In Forex, leverage matters, right? Leverage actually matters in Forex, right? Meaning your leverage can increase your profits or take you out of the trade. Because for instance, now, if you have $1,000 and you're using a leverage of 100x, it will be 1,000 times 100, meaning they'll be able to give you positions of maybe up to 100,000. Let me see, $1,000 times 100x, right? It means they'll be able to give you positions worth $100,000 in the market. So you can open as many positions as much as $100,000. But each time you're risking, you have to have a particular lot size. So if I open like 0.22 or something now, or 0.5 on my BTC, it means that for that single position, I'm opening $100 for my account. $100. And to keep that trade open, I will need my margin, which is that entire account I have, my $1,000. But I can actually open as many positions if the trade is going in my favor. But when it comes to crypto, when it comes to exchanges, crypto exchanges now, your leverage does not increase anything like profit. The leverage only works there, right, to help you open a position if you cannot afford to open that position. For instance, the person who wants to open a trade on BTC and has only $10, right, and maybe the trade he wants to open, $10 cannot afford that trade. He needs to use 100x leverage to afford that position. But somebody who has like $100 can use 1x to open that position of $100. Are you getting it now? He doesn't need to borrow any money to open that position. He has enough equity to open that position on crypto, right? So whether the trade goes to stop loss or take profit, the leverage does not have any consequence other than the fact that you get liquidated quicker when you use high leverage on crypto. So have I answered your question, please?
Yes, thank you.
All right, thank you very much. So guys, if there is no other question, I would like to cap the class at this point, okay? I didn't intend to take you guys take this long, all right? I hope you guys got value from the class.
Yes, sir.
Yes,
So
we got to.
how can we get the screen record?
Sorry?
How can we get the screen record, sir?
How can we get what?
The screen record.
Oh, yeah. I'm going to send the recording. As a matter of fact, right, I'm going to upload it on my YouTube and then forward it to you guys, okay? Is that okay?
No problem.
All right. Thank you so much, guys. I'm really, really happy that you guys were part of the call, right? So please take your time, watch the video over and over again, all right? And stay blessed, guys. Happy Sunday. See you when we see you again. Bless.
Okay, will you post your YouTube link on the channel?
Yeah. I'll drop it on the community. I'll drop it here.